Let's bring over our next guest. This is Robert Beasley, CEO of Cansortium. How are you today, sir?
Hello, good morning.
Good morning. The ticker here for our folks in the chat watching it's CNTMF. CNTMF is what I have there. Is that right, Robert?
That is correct.
All right. Well, I'll let you get started, my friend. Welcome, and we'll be back for some questions.
Great, thank you. Yeah, good morning. I'm Robert Beasley, CEO of Fluent. As indicated, we're under the ticker indicator CNTF. I want to tell you a little bit about our company. I'm fairly new to the CEO position, although having taken it in September of 20 and being blessed with the seat at that time, it feels like more than just a few months have passed with the changes that we have made. I want to tell you a little bit about our company. Fluent is not as well known, even though it had as early a start as Trulieve and others in the state of Florida. It did not quite develop out vertically in Florida in the early days, as it focused on the horizontal expansion by accumulating licenses and developing assets in the other states. So let me go through that with you, where our footprint at this point is we have a vertical license in Florida. We have 24 dispensaries presently, with 3 coming online soon. And by soon, I mean we have a dispensary opening every week in June. We will have one opening starting next week in Miramar, the next week in Deerfield Beach, and the following week in Pennsylvania, in the town of Mechanicsburg. In Pennsylvania, we have one dispensary with 2 coming soon. Again, the dispensary in Mechanicsburg will open July 1. Then we have located our 3rd dispensary, which completes our total number of dispensaries allowed in Pennsylvania at the time. In Michigan, we have a cultivation center. I'll show you more about that later. And then Texas. Everyone following the Texas legislation will note that we just had some improvements to the scenario there in Texas, and we're looking forward in expanding our operation there. We're one of 3 vertical licenses. For financial highlights, we've experienced tremendous economic growth, 49% in Q1 2021 over 2020 last year. We're looking at a projected revenue now of 90 to 100 million total for the company between all of the states. And that's an EBITDA of 30 to 35 million for 21. Going a little bit deeper into Florida, as you'll see here, we have a good coverage of the state. The focus initially was in Broward-Dade County and then the Central Florida region. Our new focus will start to develop more in the Panhandle and the North Florida region. Our primary cultivation and processing center is a vertical system in Tampa, Florida. It's 22,000 square foot floor space. And then it has flowering canopy over 6 levels and 14 rows. Additionally, it has a mother building and some accessory grow trailers. The facility is currently undergoing renovation with a new facility constructed adjacent at 20,000 square foot, which will pretty much consolidate our packaging and processing scenario, but also add an additional 4,000 foot of flowering canopy. We anticipate this new facility to be complete by the end of Q4 2021. We also have our Sweetwater cultivation facility. It's 26,000 square foot. It is a design for 11 grow rooms. We're currently growing in 6 of those rooms, and we are expanding as we speak to add the additional 11, up to the additional 11. I anticipate that we will have the additional 11 up and running by Q4. We also have a 40,000 square foot, about an acre greenhouse behind the facility for the purpose of growing cannabis for biomass purposes and oil purposes. It will be done probably in the next 2 weeks. We'll go through the workout phase of the various fertigation elements and so forth, and we hope to produce a crop out of there by the last week of August in 2021. Again, looking at Pennsylvania, this state is experiencing tremendous growth. The rumors and suggestions of recreational are right around the corner. We see that our store in Hanover continues to grow month over month. And we're looking forward to opening our stores in Mechanicsburg and then our 3rd store. Michigan also continues to grow. Michigan struggles a little bit with respect to the operators, both inside of Michigan and then also outside of Michigan, and product flow. It continues to be underutilized and underserved as far as the total amount of cultivation. Currently, we are holders of 4 Class C medical licenses and 2 Class C adult licenses. we're allowing up to 5,500 plants. We planted last year in Michigan and had a tremendous harvest, but blessed by an Indian summer last year, which allowed the crop to really fully mature and put on a lot of weight. We are now planting again, should have crop in the ground here pretty soon, in the same footprint as last year. We've acquired an additional 8.5 acres next door. The plan there is to build a greenhouse, working with the township now to determine if the permitting process for that. This will allow us to bring cultivation indoors and level out the number of crops per year, as well as the timing of those crops. In Texas, we're one of three. This is significant. The market dynamics are very similar to what was going on in Florida in 2016. You have a typical southern state entry into the medical cannabis market. The legislation was very conservative at first. This round, we both lobbied and monitored very closely the progress. Had the roller coaster of ups and downs that you would expect, and watching the legislative sausage being made. Had anticipations that we would get THC expanded up to as high as 5%. That did not occur. 1% was the resulting compromise. Expansion of conditions was positive. The new PTSD addition will be a tremendous add. Also, the legislative provision of allowing DPS to now continue to expand or control the conditions will be tremendous, because as everyone should know, the legislature only meets twice a year, or once every 2 years in Texas, and so it's very difficult to sit and wait every other year to see what kind of expansion we should expect. We currently have a facility in Schulenburg, the right to expand up to 400,000. We're not growing in that amount of space at this time, but now with the new legislation and the expansion, even to just 1%, it does allow us to start beginning to grow market share and to begin working with DPS to establish a viable sales program in Texas. Recently, our big news is that we were successful in both a capital raise as well as a debt restructuring. A tremendous amount of excitement bringing dollars into this industry. And what was different this time from the last time we did a capital raise and a debt restructuring was the amount of U.S. interest. The money traditionally has come from Canadian firms in the early days, and now we're seeing almost entirely U.S. firms poking their heads into this market, trying to get in, a lot of eagerness, and it resulted in a tremendous amount of success in our capital and our debt raise. Our revenues continue to increase. We went from 28.5 in 19 to 52.4 in 2020, and as indicated, I'm forecasting 90 to 100 in 2021. What is going to allow us to get from the 52.4 to the 90 to 100 is the capital amount, CapEx, that we now have available for deployment. Most of our cultivation plans were multi-phase build-outs, contemplating the kind of a build as we go type scenario. And now we have the money. So we've pushed the green button on the construction of many of those plans. That's going to allow us to go into a ramp phase. So I anticipate that Q3 and Q4 will be ever increasing in the Florida market. Pennsylvania market will continue to expand by the additional of the new dispensaries. That's all for my presentation this time, but I'd be glad to answer any questions.
Hey, Robert, thank you so much. I really appreciate that. Let me just pull up what we have here. And Mark M is the first one to ask us a question in the track here. When can I buy Cansortium without the foreign transaction fee?
That's a great question. We're working on that now to upgrade our listing, as well as look into a co-listing scenario. And so we're aware that that is a hindrance to investors entering into our and buying our stock. So we're working on that now, and hopefully that'll be the subject of a press release upcoming.
Awesome. So let's talk about the footprint for a second here, Robert. And you guys in the chat, please keep throwing in questions here. But this is super interesting to me, and I wonder if you can provide any color on this. You know, we've seen a ton of M&A in the sector in the first half of this year, right? Your footprint in Florida and Pennsylvania has got to be very enviable for a lot of companies out there, right? And fairly enticing, I would imagine. And on the other end of the spectrum, I would imagine some of these markets that you are in which are really, really, picking up steam, like Pennsylvania and Michigan, for that matter. There may be opportunities for you to expand. So I wonder if there's any conversations that you've had recently, or anything that you want to tell us about, the overall opportunity for growing and expanding, or potentially teaming up.
Yeah, well, let me just kind of describe to you the pathway that we've been on, and then I think it'll help put it in perspective. The answer is yes. We receive offers, letters of interest, to both buy particular assets, like the Texas asset and the Pennsylvania license asset, all the time. We receive offers in various waves and phases to consider an M&A scenario with other MSOs. The pathway that we've been on is that, I came on in a consulting capacity and advisor capacity in January of 20, and remained in that capacity through September of 20, when I was appointed as CEO. At that time, we had some work to do. This company had extended horizontally, but had not yet invested vertically in developing out its assets. The prime example of that is Pennsylvania. The company had possessed for some time a license to open 3 dispensaries, but only had 1 open. Very easy turn of the key to get 2 more dispensaries open, and thus triple, if not greater than triple, the revenues. Florida had a decent footprint at the time with 20 dispensaries. We're now at 24, headed to 27. Cultivation capacity in Florida was underserved. The stores were not able to reach their highest market potential because we just didn't have the product. Very common problem in these companies because of the capital needed to build cultivation and processing. So at that time, when I first came in as CEO, we had several offers, but they all represented a fair representation of our current value and not our potential value. Really, what the board decided at that time is to just tend to our knitting for a minute, buckle down, restructure the balance sheet, raise a little money, get the capital needed. It took me a few months to put together a cultivation expansion plan, and a series of plans to both cut expenses, cut off some of the dead-end assets, and then also just restructure the company, right the ship, if you would. And so the board decided, and of course I supported the decision because I wanted the opportunity. Let's take a minute, right the ship, bail it out a bit, get it a little bit more streamlined, a little bit more efficient, get that EBITDA up, and then we're just a more attractive buy. Or we turn into an acquirer. These options become available to a company that's in a $100 million revenue scenario. With the cultivation capacity that we're going to build by the end of Q4 of 2021, we not only will have $100 million annualized cultivation capacity, we'll be working towards a $160, $200 million cultivation capacity to be able to produce the milligrams needed to realize that level of sales. So we're a whole different company at that point. Balance sheet is secure, capital, money in the bank, revenues and revenue earning capacity all in place. Then the board could then consider a new round of scenarios. And I don't know what that will look like. My job is very simple. Get this company dusted off, upright, and performing like it should be performing. I described it in the early days that if it was an old car, you'd say it has good bones. It just needed a little bit of cleaning up and polishing and organization. And we've done that now, and now we're on the track. So those offers that represented the actual current value of this company versus the potential value just weren't sufficient to get the kind of return to the shareholders that they deserve, quite frankly. The shareholders who stuck with this company with the $2.50 IPO all the way down to 11 cents and now back to $1.15. It touched $1.30 the other day. This is tremendous movement. These shareholders deserve the time and patience of maybe another 18, 24 months to realize the revenue potential that we now have put in play. Of course, it involves construction. Everyone knows that construction is it's tough right now. Yeah. I'm constantly every day talking to our contractors, looking at electronic components from China, looking at long lead items, looking at shipping concerns. I need to build it fast, but we need to build it right. And so Sure. We're working on that. Then, of course, after you have a construction project, you're a farmer again. So you've got to cultivate, and cultivation it's not easy at scale. So that takes time too. So give us a minute. and then this company is going to look completely different. Now, it's going to be more expensive to buy, but the result should be a better result for the shareholders. That's the game plan. It's very simple. Yes, we're getting offers. Yes, we are. We reached a point in December or January. I'm sorry, probably around February of this year, where we indicated saying we're just going to hold on all offers at this time. We're going to take a minute and tend to our knitting, and so that's what we've done.
I like that. Well, thank you, sir. I appreciate that. We have about 5 minutes left, and I have a slew of questions coming in from the chat. The folks are very interested. So, can you just very briefly describe the relationship between Cansortium and Fluent? Right. I know there's a discrepancy about what you're called or what you're specifically going by, but give us.
Cansortium Inc. is the publicly traded pubco in Canada. The Fluent is the trademark or trade name that it operates under. When this company went IPO, the original license in Florida was under Knox. It was the name of a nursery in Florida. And at the IPO, there needed to be a rebranding according to the deal with the Knox family. And so there was a rebranding from Knox to Fluent. And so Cansortium Inc. is the company, the pubco company, and Fluent is the brand of which they sell product under.
Okay, thank you for that. That does provide some clarity. Thanks. I've got another question about the board members you announced this morning. Can you tell us anything about those two folks?
Well, we're entering this new phase. The current board, they were all hands on deck, and quite frankly, they did an amazing job keeping this company together. It was without a CEO for a while. They brought me in, and so you saw board members what I would call go operational. And they worked, above and beyond what a board member should have been asked to do. Weekly meetings instead of more than monthly or quarterly. There was a lot of talent on the board that was able to help with the financing sector. David Abrams was instrumental to come in. And quite frankly, we've entered a new phase. And like a lot of boards, this company took a little bit longer to enter the second phase than it originally should have. But when it enters this new phase, now it's wings level. And it needs to start getting one new blood in there. I wouldn't say that the board members are exhausted, but they're exhausted. And there's an opportunity to get a new blood. We also need to reach out. We need to bring board members that have cannabis specific experience. So we looked for a board member that had been on other cannabis company boards. We need that industry knowledge, and we need that industry connection, quite frankly. And so I think you'll see this board change over the next few years as it develops more into a mainstream cannabis company and a major player. Having a board that is more connected to the cannabis industry is essential for that to happen.
Great. Well, in our last 2 or so minutes here, Robert, TJ from the chat and I are on the same wavelength. What is the potential of the Texas market in the short to intermediate term, right? With the new legislation that's happening, the expansion of what the possibilities are. You guys are clearly a first mover. And I think I read recently, or maybe it was even in your deck, that you said it's reminiscent of 2016 Florida, right? So give us a sense of where you are in Texas and where you're going.
So now with 1% THC, we can sell products. We can make products for that market. The market now has a couple major obstacles that need to overcome for expansion. One, we need to convince DPS to dislocate this requirement that you have a retail center attached to your grow facility, which means if I wanted a store in downtown Austin, I'd have to have a greenhouse attached to it, which is almost impossible. So we need to talk to DPS about the rationale behind getting rid of that scenario. This would allow us to start expanding footprint to bring the product to the customers. The next thing that needs to happen is we need to educate the consumers. It is very much like Florida in 2015 and 2016. A lot of young, inexperienced cannabis consumers that will be first time to the market of cannabis, first time to reach out to this as a medicine. There's only 5,000 patients in Texas right now, and that's because there's no reason to be a patient in Texas. You can't get the product. And so we need to start talking to those potential patients about the benefits. So we're going to have to create our own market. To do that, we need footprint. We need products that will help them. And then we need to start an education campaign and an outreach campaign. This is the plan. We probably will not create a great deal of profit or even revenues in the first year or so, because we need to develop market share. We need to develop footprint. We need to develop a market. Right now, if you think about a medical market in Texas with 5,000 customers in a state the size of Texas, it's borderline viable. And so we're going to have to make the market.
Got it. Well, listen, Robert, I really appreciate you joining us. This has been a great discussion. You guys in the chat, I hope we got to all your questions. I know you had many, but Robert, thank you very much. I'm sure we'll see you again soon.
Okay, thank you.